If you're looking for a highly educational market analysis, you're in the right place. This is the Transparent Effects Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight to the charts. Into this video, I want to speak about Euro NZD. Now, why do I want to speak about Euro NZD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower ones. We will also check what we have when it comes to the commitment of traders, which is basically the COT data, so what the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment, we are respecting the previous level of support, which is now again support here. In fact, in 2 days and 9 hours, we will have the close of this monthly candle. And at least at the moment, it seems like this close will be above this previous low, confirming this area as support and potentially showing that the market has the intention of providing a double bottom at this area and failing in breaking lower. Going down on the weekly time frame, what do we have? Now here on the weekly as well, we can see how the market has just created this double bottom, failing in continuing lower. In fact, the market immediately rejected the support and demand created by this previous wick that we have here, showing very strong buying pressure inside of here, which the market again reacted to when it was testing the level here. And at the moment, we are rejecting to the upside quite aggressively. Now, if we look at the bigger picture, we can also see how we kind of formed an M pattern here. Therefore, a potential move to the upside definitely seems possible. But most importantly, if we look at the natural structure of this market, we can see how the previous level of support is here, which is now turned resistance, meaning that what we can expect is for the market to provide a move to the upside, to go and test this previous support and resistance before then potentially getting rejected to the downside. Now, if we go on the daily time frame, what do we see? Now here on the daily, we can see that the market did in fact create a quite nice M pattern. Now, in general, after the creation of an M pattern, what we want to see is the market create a move to the upside to go and complete the pattern at the previous support turned resistance. In fact, if you remember, I spoke about Euro NZD when the market was around this area, explaining why we wanted to see this move to the upside. Now, the market has in fact created this move to the upside, breaking above this previous level of daily support, turn resistance here, which, now that the market has once again broken to the upside, is turned against support here. In fact, if you have the market that creates a move like this, down, up, lower, low, and then a move to the upside, what you expect at that point is a retest of the previous support, which at that point is against support, and then a rejection to the upside. Basically, the creation of an inverted head and shoulders. So what we expect in a situation like this is a correction from this impulse, a test of this previous support, which is against support, a rejection to the upside for the creation of this inverted head and shoulders. This is what ideally we would like to see from the market to create. Now, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. If we do that, we can see how at the moment we have the 0.32 Fibonacci retracement, which is lining up perfectly with this previous support, which is now against support here, meaning that we could definitely expect the market to go for a retest of this level before then getting potentially rejected to the upside. Now, if we go and see what we have when it comes to the COT data, so what the non-commercials and the biggest speculators in the market are doing, and we check the data specifically for the euro, what we can see is that with the last reports, net positions have been decreasing. We went from having 64k to having 18.7k net positions. So the euro has been getting weaker. We can see that clearly reflected in the price action with the market melting to the downside. However, important to notice that with the last report, we now are starting to see shorts getting closed. We don't see shorts getting added yet. So what this means is that we could easily get a deeper correction before then getting more shorts added from a better price from an institutional perspective. So another accumulation of shorts around here, and then the long-term continuation can continue. And if we go and see what we have when it comes to the NZD from a COT perspective, what we can see is that obviously net positions have been growing. We can see that clearly reflected here, going from minus 14K to plus 3.6K net positions. However, we just had the shift from a negative net positioning with more shorts than longs to now having a positive net positioning of more longs than shorts, with 21.4K longs and only 17.8K shorts, which means that overall we just had the shift. There is definitely a possibility to see more accumulation of longs, since we just had 2 reports where longs were added. And if we want to add longs on the NZD from a better price, once again, what we need is for the market to provide a deeper correction before then seeing an accumulation of longs on the NZD from an institutional perspective, which would obviously drive down Euro NZD because the NZD would be getting stronger. So if the market will provide a correction back to this area, how we could potentially be approaching a situation like this. Now, what we could be doing is, as usual, being reactive and not predictive, because trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action when it comes to the 4 hour time frame to wait for the market to shift from a bearish environment to a bullish environment and potentially provide to us one of our valid entries. That could be triggering a continuation to the upside. Now, if you don't know what I'm speaking about when I say to confirmations and entries, that is part of the mentorship program. Is a little bit more advanced concept. The mentorship program is now free. You can gain access to it for free. There's a lot of value in it, hours and hours of everything that I have learned from the market in all these years. The link is below, and you can gain access to it now for free. So make sure you go and check it out, and I will see you in it. Also, if you enjoyed this video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm. So I would really appreciate that, and I will see you in my next video.